Hi, this is Kirk with Forex Strategy Secrets, and today we're going to be talking about the 15 strategy. It's a trading course, and the pip snatcher. So everything that we're going to show you today, it can be learned quickly. Now we'll go give over some testimonies, and you'll hear what people are saying about how long it's taken them to get up to speed. We're going to show you a complete trading strategy that you can actually make money with as well. I want you to hang on. There's going to be a little bit of slideshow here, and then we'll get right into some charts, and we'll show you what we're talking about. We need to set it up so you know what we're really talking about. Some people say, "Oh, we're just going to click off. It's not any good," but the good part hasn't come yet. First, we'll give you an overview of the 15 course, then we'll go to the charts and show you what we're talking about, and that's going to be very soon. So the course covers the lot sizes you should use, the pips that you might want to shoot as a target per day, time frames that you should use, how to get started each day, the direction you should be trading, entry signals, exit signals. Now these are not just random general exit and entry signals. They're pretty precise, and you should know right away which direction you should trade. So we'll be covering that. There's a lot of information there. Many courses don't give you exact lot sizes and how to figure the lot sizes. They don't tell you about how many pips you should shoot for each day to make money, and that's what we're going to be doing. So here are some things people are saying about the 15 course. The entire course is a work of art. You guys covered every base. Another one says, "This is the first real self-contained system that I've ever seen in my years of trading. Day 1 was a loss. Day 2, I made a couple pips. Day 3, made 21 pips." And so that's pretty good progress by just a few days of having seen a course. Now another one says, "The 15 strategy is currently a dead giveaway. I started making real pips within a matter of days, not weeks or months of studying needed. Everyone can make pips with this product and training." I agree. I've seen it happen. These people confirmed what we were actually hearing from others that haven't reported anything to us, but we were talking to them in the PIP club, and they were sharing the same thing. So some of the benefits of this course: there's fewer hours having to be in front of the computer to make the pips. Smaller drawdowns. No trades held overnight, so you don't have to be worrying about it, whether you're going to wake up with a loss or pips the next day. Greater profits with smaller moves. You don't have to have 500 pips a day to make some profit. And there's less risk, and it's more profitable. It takes less than 2 hours to watch the videos. I asked one person how long it took. He said, "Well, I took 2 hours to watch it. I could have watched them in an hour and a half, but I took my time and I was looking at the video." So it doesn't take very long. That's the whole course. Then you can perfect it after that. The PIP Club. Now we have a PIP Club 3 days a week, Tuesday, Wednesday, and Thursday, for a couple of hours. And this is where you can see things in action, you can ask questions, and you can hear people talking about it, how to use it, how it's going to benefit you. And then you can join our scanner forum. That's where the people who sign up for the 15 course, they can talk to people on Skype 5.5 days a week. But there's people around the world, and many times there's someone there that will answer. Those are support tools with the course. Now, we've been talking about the 15. Now we're going to talk about the pip snatcher, and we'll go into detail as to what that is. The pip snatcher is part of the 15. It is a method of timing the entries to trades. So we'll show the 15 and the pip snatcher and how they work together. So now we're going to go right to the charts and get started. Now what you're seeing here is a 15-minute chart, and I drew this vertical line here. This is when the PIP club starts, and so that's what the markets look like when we first got started. So I'm going to say, okay, that's when you started. What do you do each day? You want to figure out which direction you want to trade. I'm going to share with you quickly. One of the key things is look at this moving average. Which side of that moving average are the price bars? That's your first heads up. But this one says it's got all this red, meaning that's a sell direction. So that means probably not going to look at that one. You want to wait until this one goes long. Now it took about a half an hour. We started getting signals to say, okay, we can start looking for long trades. We'll come back to this in a moment. Let me just scroll through a couple of these so you can get an idea, and it doesn't take long to understand which way you should be trading. This one, you want to be looking for long signals, but it's going short, so you wait until it goes back long in the direction. So sometimes they're set up right away, sometimes they're not. That's a counter trend trade. This one, right off the bat, you knew that you should be trading short. Everything was set up so you can start looking for short trades. Let's just look now. Pick out 3 or 4 currency pairs that are really set up now, and then have some others on a watch list that you want to check with. So I'm going to go to this 5-minute time frame. Okay, it said yes. Right as soon as you open up, that said yes. That's the direction you should be trading. If the 1 minute sets up right, which it looks pretty good, you could have taken a trade right there, just right off the bat. As soon as you turned your computer off, as soon as you came to it, and then you would have been trading in that direction. You could have taken maybe 5 pips. It wasn't a big trade, but it was definitely a solid trade. Another, so 5 pips, 5 pips. There's 10 pips right off the bat that you could have been taking. And another trade over here, but you could be looking at other trades. That was a 15 pip move. Okay, so that's what you do at the beginning of each day. Which time frames do we use? 15, 5, and 1. 15, you want to find your direction, time your trades on the 5 and 1. And the pip snatcher falls in with the 5 and the 1 time frames. So we'll talk about that a little bit. So you saw how in just seconds we could determine which direction we want to trade with a pair and if it's set up or not. Exact entry signals to look for. Okay, let me go back to the 5 is just a confirmation, that's the direction, and the 1 minute is what you're looking for. I'm going to name a couple of things here, let you learn some of the things you'll be looking for. Fresh crosses. When these 3 indicators cross above or below that 0 line, if they're positive or negative, either way, it doesn't make any difference as long as they're crossing. Well, that's a heads up. So we had 4 indicators, and they were all the right color. So that's called a 4-bar. All these little colors are bars, and so we just call them a 4-bar. And then on the right side of the 0 line, yes, that's exact. You say, oh, and it's below this moving average. So you're going to take short trades right off the bat. You can just say, okay, boom, that's exact. It's not a matter of there's a question. It is right straightforward. And the exit signals are going to be the same. Now, the lot sizes. We trade larger lot sizes. Why do we do that? Because if you trade more pips in this, say this 5 pip move right here, and you had your lot size larger, you can have a greater increase in your account just only making 5 pips. Then you made another 5 pips over here, so you have 10 pips, and you've reached a good percentage increase in your account. Usually if you trade the lot size we're talking about, you do 0.5 to 1% increase in just 1 or 2 little trades in your account. Now you add that times 20, now you're looking at 20, 30, 40% increase in your account by using larger lot sizes and going smaller number of pips needed per day. Okay, what would be the target range for the number of pips that you would need? We suggest shoot for at least 10, but range it between 10 and 30 pips a day. If you get more than that, great. Then you've just made that much more money. If you get less than 10 or 0 or have a loss, well, you can make up. The next day you can make up that. You don't worry about it, you just shoot for your goal again, 10 pips a day. So between 10 and 30 pips a day with larger lot sizes. We show you how to calculate the lot sizes. I want to go back to this one. That's the 15 direction. The thing you want to look for. How do you know when it's ready to change? Every 15 minutes you ought to be scrolling through these charts to see what they're looking like. When that color changed right there, that's heads up. I'm going to draw a vertical line on that. That says heads up, go look for the 5 and the 1. Let's look at the 5 first. Well, the 5 has to be a 4-bar. It was not a 4-bar there, it was a 4-bar right there. There's the heads up. That just confirms now that you can go to the 1 minute. It's on the correct side of it, to the moving average. And we go to the 1 minute. Now we need a 4-bar, but we want a 4-bar saddle. There's a new introduction right there. There's a saddle, but it's not a 4-bar. There's another saddle. You can have saddles on different indicators. There's a 4-bar saddle, and so that would be the direction. And there was a setup for 20 some odd pips on a 1 minute chart, just right off the bat, telling you the direction. So in a matter of less than a half an hour, you could have had 20 pips. Okay, you talked about less risk, little drawdown. When you time the entry like that, many times you don't even get a drawdown. Sometimes you'll get a small drawdown, 3 or 4 or 5 pips. But most of the time you're trading the direction the trend is going, the direction the trade is going, and so that you don't have that drawdown. So if you're looking for 10 to 20 pips a day, well, right here on one trade, easily 15 pips. Maybe you didn't get in the beginning and didn't go to the end, but there's a good 10 to 15 pips right here. Okay, in less than a half an hour, you found a trade, taken a trade, made your 10 pips. Now you're at your minimum, and you decide, well, okay, I don't have any more time, I got to go, and you're through for the day. This way you don't have to hold trades overnight when you're trading like this. And so you can make larger amounts of profit with smaller moves. Let's go to this 5 minute. Goes up and it rested. Now right here is where we're talking about that 20 pips. But let's look over here. What are we looking for? On the 5 minute, we want to have 4-bar. Well, there's not a 4-bar right there, but I'm going to move this line over now to that 4-bar. And I'm going to draw a horizontal line right there. That's where that opened. Now I'm going to go to the 1 minute. What do we have? We have a saddle, 4-bar saddle right at that point. So if you enter a trade there, there's another 30 pips. See how the timing goes? We know which direction on that 15. The 5 had a saddle as well, or a 4-bar. It had a 4-bar. And then you can trade after that. You can trade on this 1 minute. You'd look for another saddle right here, possibly there. This is a better saddle because they're all on the same side. And so right there would be your better entry. See, that was only 10, 12 pips. Okay, now let's look at some others. There's one that just is going to blow you away when I show you this one. This is like the perfect move. Generally, there's at least 1 or 2 currency pairs that do this every day. This just happened to be the pound CAD today. Okay, you look at the 15. Okay, when it first started, it was on the wrong side of the 0 line. And so what happened? I'm going to draw a line right here. That's where it crossed that moving average, and that's the vertical line right there. So now we go to the 5 minute. The 5 minute, right at that point, it was a 4-bar. So now we draw that line right there to mark where the price went above that moving average on the 15. Does it have to? No. It was a 4-bar. You could have gone in closer to down this area. Let's look at the 5 minute. Now, is it above it, the moving average? Yes. Okay, so it's a 4-bar. So any place right in there, 5 minutes says, yeah, I'm good to go. Okay, now this is the part you're going to be amazed. On a 1 minute chart, okay, right here, what are we looking for? We're looking for 4 bars, but we want them to, they're stronger if they're all on the same side. That's not a saddle right there. This is a saddle, all the same color and a saddle right there. So that would be the place that I would say would be one of your first entries. Another entry, if you'd wanted to, could have been right there. And look right here. I'm going to mark some of these. I'm only going to mark part of them. I'll mark that one. That was your first 4-bar saddle. So that was your first entry, let's say. And we're marking 4-bar saddles. There's another one. This is ideal. But what if you only got half of ideal? This is going to blow you away as to what the possibilities are here. Okay, every one of those moves was a 4-bar saddle. Starting right here. This first one was just heads up. It started right there. So exit signals are, I'm not going to go through what the exit signals are, but there's an exit signal right here. Believe it or not, I mean, the exit signals are right at the point where the market changes directions. And so within 2 or 3 bars, there's your exit signal. So I'm going to draw a line and say that's the exit signal right there. So now I'm going to count the pips you could have made if you'd taken an add-on. Every time you get a fresh saddle, you took a new trade. There's 1, 2, 3, 4, 5, 6, 7, 8, 9 positions you could have on that one thing. Now this idea, you're probably not going to take this many, but let me just show you the possibilities. Whatever the number we come up with, let's just divide it in half. Can I add these in my head? I may be off. So there's 20, and there's 40, and there's another 4. There's 80. Another 40 is 120, and that's 60. 120, that's 180. There's 280, 390, 400, and well, let's say 500, and 640 pips. If you just add on every time it gave you an add-on signal. These happen regularly. This is a long one. I'm taking an ideal perfect situation, but we can go through there and find it. So if you take that and have that's 300 pips. Well, if you divide it by 10, that's 60 pips. There's easily 60 pips in that trade. So you didn't do all the add-ons. You just put one on down here, right in this area. You said, okay, I'm going to take the trade, and you went the 60 pips, and you took your 60 pips out right there. Get the concept as to how you can make a lot of money in a short period of time using larger lot sizes, very little drawdown. You don't have to spend a lot of time in front of the computer. I've shown you an ideal situation. We're going to show you some examples of trades that were taken using the 15 strategy. Now these examples were taken before the introduction of the Pip Snatcher, and we'll show you 1 or 2 trades with the Pip Snatcher also. Here's a trade of an individual shared with us. 23 pips over on this end, and 60 pips over here. This area here is when he was sleeping. He slept in between these 2 trades, and so he made a lot of pips in like less than 8 hours. Here's 23 pips as a counter trend trade. This one was the 5-minute Mayo saddle, 39 pips. There's a saddle right there, 4 bar. These are actual trades from traders that they've just shared with us. This is a big one, 195 pips on a 5-minute Mayo saddle again. And there's a lot of pips there. Okay, this illustration is the 15, 5, and 1 minute. Same trade, just showing you what it is, and it was 20 pips. So right here, the heads up was which direction. This is a counter trend trade. Trend was going up, it's coming back down. He said, okay, that's what the 15 looked like. Right at that exact point, the 5-minute was there. It was a 4 bar also, and had a saddle on the filter. Right here, I can't tell what it probably had to be a 4 bar. He took the picture when it was behind that logo, but you can see that it entered and he exited the trade over here. Good exit signal. 20 pips. I didn't take maybe a pip a minute. Here's 15 pips. Has a 15-minute and a 1 minute. You can see the heads up. That's the direction you're trading. And right here, where he got out. He could tell by the exit signals the market was going to turn on him. And so he took his 15 pips and he was on his way. So do you think that you could find several 10 to 15 pip trades per day? Yes, you should be able to if you just follow the rules in the system. Okay, here's a 1 minute pound yen 12 pips. This is before we introduced the Pip Snatcher. And the fellow that I shared this with, I says, let me see that trade you took that you made 12 pips on. and he was off looking at something else and wasn't paying attention, and he missed the big move over here. And everything said, yes, you should be adding on to this trade. He said, had I had that pip snatcher, that moving average right there, and knowing what you just shared with me, I would have stayed in that trade and taken out a lot of pips. This is a euro. This is only a 10 pip move. See, this, took these about the same time. That's probably a good exit on that one, but he didn't get into the rest of the move. Now this is a trade history of a trader just started with the strategy. Took 39 trades. Not every trade is going to be a winner. I don't care what you, not even all my trades are winners, but you notice that the trades were, the losses were cut short, the winners were let run. And you can have that type of a trade history also. Okay, here's a losing trade. This is before the pip snatcher. Why was this a losing trade? It was a sell trade. Why should this trade have never been taken? Because all the indicators were on the top side above the moving average, and they took a sell trade. I guess they were figuring there was going to be a retracement here. It didn't happen, and so there was a loss. Okay, this is a different trade, and it's 15 minute and 1 minute. Okay, 15 minute, here again. All these were above, and the person lucked out in the fact that it moved down here, that very point right there, 10 pips in their direction. They had their stop loss set up here, so they didn't watch it, and it came back. There were exit signals right in here that could have broken even. Worst case scenario, break even, but they just let it run to take them out at the loss, and then the trade went back in their direction. You can see over here on this 15 minute how it started going, and the trade did eventually go in the right direction. Why was that trade a losing trade? It was because of poor management and timing. Yeah, it was a bad trade to start with, but if they'd managed it right, they could have at least not had a loss. And if the pip snatcher had been used to entry, the entry would have been right over here. Everything on the right side, and that's where the trade started moving in the direction. So you can see that, just a little bit of review. You know what to do each day, you know which time frames to trade, you know which direction. We talked about entry and exit signals. We haven't told you how to figure the lot size. That's in the course. We've told you how many pips that you ought to shoot for each day. And you see there's less risk. You can see there's fewer hours in the market. And there's very small drawdowns if you enter properly. And you don't have to hold trades overnight. Make a lot more profit with smaller moves. Now, to get your copy of the 15 strategy, it'll cost you $500. Now, we could have, if we'd done what many people were telling us, they were saying, well, just charge $5,000 for it. I mean, that is, people are making money right off the bat. Well, no, we got to have some people. Well, charge $2,000 then. Well, that's still too much. We only have a few people who will be able to come up with the $2,000. We want to have more people. That's why we set it at $500. And you get with that the complete trading course, 2 months of our scanner. I haven't talked about the scanner. The scanner will bring a lot of these trades to your attention. I was showing you manually how to look for them. But if you have the scanner popping them up, then you're only looking at trades that are set up, so you really less work. And if you'd like, you can get some strategy coaching as well. So after the 2 months of the scanner for free with the course, then to maintain the scanner, that's $50 a month. So we thought that was a better approach rather than charging $2,000 for the course. Okay, yeah, there's another method of doing it. We have two ways of getting involved if you're interested. One may work for you, one may not. Here's the link to get the 15 course. So you can take this and copy it in the browser. Let's go over the other method. You can get the scanner and the 15 strategy course for $100 per month. And here's the link for that. There's no discount. It's just $100 a month, but you don't have to come up with the 500. That fits some people's budgets better, and then right away they should be able to start paying for it. If say the first month, say, okay, I'll pay the $100 a month. This course can be learned in days. You perfect it over 30 days, and then you get your live account open, fund it with some money. I would suggest try and get at least $1,000 in your account, and then trade the lot sizes we suggest. You'll more than pay for the course material. So if you have any further questions, you can contact Jed or myself at jed@forexstrategysecrets.com, and this way you can actually start making pips.